I'm Mark Gordon with GoldenTicker.com, and I'd like to welcome you to our Harmonic Trading Quick Start tutorial. Harmonic Trading is a simple but powerful trading system that I've developed over my 20+ years of trading the markets. The first thing you need to know is that you cannot beat the stock market. That's right, the stock market is unbeatable. In order to make money, you must always trade with the market and never against it. You are not smarter than the stock market. Nobody is. Trading with the trend of the market is the most profitable strategy you can follow. It's the way most successful traders make money. Our system uses 4 simple tools that will keep you in harmony with the market, but only if you use them. I'll show you how to use trend lines, moving averages, stochastics, and Bollinger Bands. Don't let fancy words like stochastics and Bollinger Bands scare you. They are very easy to use. And when used together, you'll have a simple yet powerful trend trading system. Let's start with trend lines. They'll show you the current trend of the market. Quite simply, an uptrend is when prices make higher highs and higher lows. Here's an example of prices that are in an uptrend. When I add the gold trend line, you can see it clearer. Remember, an uptrend is when prices make higher highs and higher lows, as seen here. An uptrend begins the minute you clear a previous high. Here's your previous high here, and we cleared it here on this day. An uptrend ends the minute you make a lower low. A downtrend is the opposite of an uptrend. Prices make lower lows and lower highs. Here's an example of prices that are in a downtrend. And when I put on a gold trend line, you can see it clearer. Prices are making lower lows and lower highs. The downtrend began right here when we took out this previous low here. And the downtrend will end when we take out this previous high here. If you want to make money in the stock market, it's very important to always know the current trend of prices and never trade against it. You can learn how to draw trend lines in our other tutorials. We'll now look at our next tool, which is moving averages, and the most important one is the 20-day moving average. Most charting software has a 20-day moving average tool in it, and it's simply the last 20-day closing prices added together and then divided by 20, and then it's plotted along a line. It's very important that you only buy when prices are above the 20-day moving average and in an uptrend. Conversely, you'd want to sell or go short when prices are under the 20-day moving average and in a downtrend. So we'd be bullish if prices are over the 20-day moving average and the trend is up, and we'd be bearish if prices are under the 20-day line and the trend is down. These rules are very simple, yet the majority of traders fail to follow them and lose money. Here's an excellent example of a strong uptrend we caught back in May of 2008. ReneSola, a leading solar stock, went into an uptrend when it made a new high. The previous high here was at 1747. At 1748, 1 penny above the old high, the stock began an uptrend. Prices were above this red line here, which is the 20-day moving average, which confirmed our buy. The stock went on to make higher highs, as seen here, and each low was higher than the previous low. You would have sold the stock at $24.90 when it took out this previous low here for a 42.4% profit in 3 weeks. Let's take a look now at stochastics. It's an indicator commonly used, and it's at the bottom of every one of our stock charts. And it measures if a stock is overbought or oversold, and it also can measure price momentum. Stochastics are made of 2 lines. One is the K line and one is the D line. In this case, the K line is the black line, which is a faster moving, more volatile line than the red D line. These 2 lines oscillate between 0 at the bottom of the graph and 100 at the top. And the way we use stochastics, anytime one of the lines is over 70, you're overbought and you don't want to be buying. And anytime one of the lines is under 30, you're oversold and you don't want to be selling. Stochastics also can give you a measure of momentum. Here you can see the arrows pointing down along the black K line, which shows you that momentum was going down. And then it switched here and momentum was going up. Now the optimal place to buy using stochastics would be as the K line or the D line is moving up and is not over 70. And conversely, you'd be selling if the K line or the D line was moving down and not under 30. So by giving a quick look at the stochastics on any chart, you can avoid buying in when stocks are overbought or selling when they're oversold. Using stochastics in this simple way will help you enter trades at the right time. Next, we're going to take a look at Bollinger Bands, and I'll show you why they're the perfect place to take some profits. Bollinger Bands were designed to keep prices within the bands the great majority of time. So when prices hit the bands, they tend to bounce back much like a pinball machine. So that means when a Bollinger Band is hit, it's an ideal place to take some profits, because it usually means prices will return back within the bands. We recommend banking half of your profits once a Bollinger Band is hit. In review, you've just learned how trend lines show you the current price trend and that you should always trade with the trend. You also learned to only buy when prices are over the 20-day moving average and sell or go short when they drop under it. You learned how to fine-tune your timing with stochastics, and you also learned how to set definite profit objectives using Bollinger Bands. Together, these tools give you a professional trading strategy that puts you way ahead of most traders. This system works for stocks, ETFs, futures, etc., and will work on daily, weekly, monthly, and even 5-minute charts. You're looking at a chart of Laclede Gas from July of 2008. And remember, you want to buy a stock that's in an uptrend and over the 20-day moving average. And here's your uptrend here as we made higher highs and higher lows. And the instant that Laclede Gas crossed this red line, this 20-day moving average, it became a buy. The next thing you want to check for is stochastics, and you want to make sure that the highest line is not over 70. So this black line, the K line, was at 63.83, comfortably under 70. You'll also want to see that the momentum is up. You want to see both of these lines pointing to the upside, which they are. So this stock was a solid buy. And the stock hit our first profit objective here at the upper Bollinger Band at 41.05 the very next day. So we sold half of the stock at that point. After that, the only thing left to do is let the remaining shares run until you make a lower low. And as you can see here, we made a series of higher lows, which was great, until we got here and we took out this low here, and we sold at 45.52 for a 15.27% profit. So that's an overview of the entire Harmonic trading system. I encourage you to see our other tutorials for more information. Trading growth stocks is a skill, and much like flying an airplane, you'll need to trust your instruments. These are the instruments. Does this system work all the time? No, nothing does. If it did, I'd be richer than Bill Gates. Trend trading systems work best when the overall market is in a strong trend, either up or down, and you can do quite well. Choppy sideways markets should be avoided. I hope you'll review this lesson several times and practice using these tools until they become second nature. I wish you good luck trading, and remember, the trend is your friend, except at the end when it bends.